Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Markets overreact because humans overreact. It's economics' longest-running collab with psychology. Innovation is simply common sense that took too long to convince everyone. Climate change is the only meeting where everyone agrees on the agenda and still nothing gets done. Geopolitics is chess played by people who insist they're actually playing checkers. Creativity is allowing yourself to make mistakes. Art is knowing which ones to keep.
India once again tops the GDP growth charts at 6.7% in 2025, outrunning the entire G20 like it is late for a flight. China and Indonesia hover around 5%, solid but no fireworks. Meanwhile, the US, Europe and Japan seem to be growing at "don't disturb me please, I'm napping" speeds. Most under 2%. The G20 as a group sits at 3.2%, which is basically the average student dragged up by one topper. By 2027, not much changes. India still sprints, China still power walks, and Germany finally wakes up to 1.5% growth. Global stock markets are basically group projects where 5 students do all the work, except in the US, where they only do 25% of it. America's top 5 companies now make up a quarter of the entire market, which sounds extreme, until you see countries like the Czech Republic and Hungary, where the top 5 control over 90%. That's not a market, that's a monarchy. Across the 11 countries, concentration is above 80%, meaning diversification is mostly a myth. Everywhere except the biggest markets, the US, China, Germany, Japan, the UK and India. Ironically, the largest economies are now the least concentrated. Everyone else is basically betting on one hand in poker and hoping it's an ace. Startups losing money is nothing new. Amazon spent years in the red, Spotify burned billions, Tesla nearly melted through its own balance sheet, and Uber basically lit cash like scented candles. But OpenAI has a whole new category of burn rate. This chart shows cumulative losses before companies turn profitable, and OpenAI's projected losses make everyone else look like they were budgeting responsibly. We are talking well past the $150 billion mark. Uncharted territory where no startup has boldly lost this much before. It might still revolutionize the world, but for now, OpenAI is the financial equivalent of "trust me, brother." India's nominal GDP growth used to roar like a 1990s Bollywood hero, 15% a year on an average during the reform decades. Even the 2000 to 2013 phase held firm at 13.2%. But post-2013, the engine has downshifted to around 10.6%, and recently the needle has dipped below 9%. So what's cooling off? Pretty much everything that normally juices nominal growth: corporate revenues, tax collections, wage growth, money supply, stamp duty, imports, all running slower than their earlier trend. It's like the entire economy decided to take a collective break. Nominal growth still matters. It captures volumes plus prices, and when it's strong without runaway inflation, prosperity usually follows. More than 34 million Indians now live outside India, basically the population of an entire state that decided to go on a very long vacation. The biggest chunk is in the US with 5.7 million, followed by the UAE at 3.9 million, and Canada with 3.6 million, which explains why half of Toronto now smells faintly of masala chai. From Malaysia to Mauritius, the UK to Kuwait, Indians have turned the world map into one big extended family, complete with unsolicited advice and festival photos. The diaspora isn't just large, it's influential, wealthy, and economically plugged in. Gold demand in 2025 has a new hero, and no, it's not the central banks polishing their walls. It's the investors. ETF demand has exploded from 25 tons to 619 tons, with nearly 400 tons of this coming in just the last 2 quarters. That's not buying the dip, that's buying the entire staircase. Jewelry demand down sharply, central bank buying also weaker, clipping 13%, but investment demand up 87%, turning gold into 2025's favorite "I am worried about the world" asset. For the first time since early 2022, when gold flirted with $2,000, ETFs are buying more than central banks. When the pros slow down and the ETFs speed up, you know that the fear gauge is twitching. India's hotel industry has a clear superstar, IHCL, which is basically the Taj Group, towering over everyone with 9,040 crores of revenue. That's not leadership, that's a monopoly on monogrammed bathrobes. In second place, ITC Hotels at 3,731 crores, followed by EIH, which is a Oberoi Group, with 2,799 crores. proving that luxury still sells, especially when someone else is paying the bill. Chalet, Ventive, Lemon Tree, The Leela, Samhi, and Juniper round out the list, all solid performance, but miles behind Taj's financial penthouse suite.